All right, Chris, we're streaming.
All right, cool.
Yep.
Hey, people.
Hey, so here we are on February. What's the date? February
20,
25th,
yeah.
2021. And this is the Trading Homework broadcast. I'm John Tate. I'm here with Chris, Sell the Fucking Rip Trader. And you see our Twitters in the lower left hand side. So markets are crashing. That's our theme tonight. We got a lot to talk about. So
Yes.
first of all, is there anything that you want to start with, Chris, or do you want me to start here?
You know what? Since I have my actual the way I trade options up, let me just do this real quick and then
Yeah,
it's all
cool.
yours.
So take us through today,
No,
what you're
no.
seeing.
No. I just want to show something on my screen. For those of you who trade options, if you have the ability to, this is something that you should really do. Um, you see how I have a quad here, right? I have four screens.
Yeah.
So on my bottom right, I have a 1 hour. On my bottom left, I have a 4 hour. On my top right, I have a daily, and that's of the underlying. If you go over here to the top left, I have the 30-minute chart of the option chain that I'm trading or that I want to trade. This way, I can look at, say, a 1 hour or a 4 hour of the underlying and look at the option chain and decide if this is a trade that I want to take. I have more information. So since it's a call, they're going to mimic one another. But if it was a put, you would have what you would consider an inverse correlation. So while the UVXY would be going down, if we were in a non-volatile environment, then the UVXY put would obviously be going up. So that's one thing that I do that provides me more information. As you can see, I'm using my fib time and price. I also use my fib time and price in my options chain chart because it works there also. If you want to learn how to do this, or if you need to learn anything else about options, uh, delta, gamma, vega, theta, whatever, the Greeks, hit me up on my Twitter. You could DM me. You could ask me live, publicly, whatever. That's it. That's all I wanted to say, John.
Yeah,
It's all
something else
yours.
we could do too is we can take questions in the chat on
Yep.
this if questions come in live, and if we see it in the comments on a video, then we could circle back and address it in another episode. So like right now we're talking about what's going on in the markets right now, but like sharpening, a trader sharpening their tools or working on their skills, like the kind of some of these things that you're talking about, Chris. That's definitely going to be a recurring theme on this show is our research into ourselves and our tools and how we're improving ourselves, uh, not just by reading news, but by uh, figuring out ways to get information better, or to take an idea from a theme and
Mhm.
get the most bang for the buck out of that trading idea by finding the very best vehicles for expressing that view.
Right. Agreed.
All right, so you
Agreed.
got UVXY up, or you had it up earlier.
Yeah, I just
Now it
took
looks
it
like you're
away.
switching over to SPY.
No, I'm looking for something that I'm in now. I am in TLT. Is there something you want me to pull up? Just tell me what you want.
Well, I mean, I've been so busy for the last few days repositioning things. So the last
Usually what
time
you
that
do,
we
what I
spoke,
do is you start talking about a ticker and I'll pull it up.
okay, so the last time that we were on here, if you remember, I liquidated a bunch of positions I had been carrying in things like pot stocks, some of
Right.
the Bitcoin miners. I had a Riot position that I got out of
Right.
fully, and I was gonna go back into Marathon, and I almost did, but I didn't. That would have worked out okay, but I was just liquidating everything across the board except for some of the long range stuff that I was in, like the silver miners. uh, the theme about the reopening theme that we're seeing a third breakout on. Yeah.
Like
So okay.
game.
So you're bringing up AG. And these are having a pullback. Like if you look at the gold miners, they actually look like they're rolling over, but the silver miners look strong. So I kind of want to circle back to that. First of all, let's talk just for a moment about the 1 inch punch trades.
Okay.
So I look at on Wednesday, near the second half of the day, near the close, I'm looking at a lot of times it's bull call spreads and bear put spreads that have 2 days left till expiration. Sometimes I leave those trades open ended. And then on Thursday, I almost always leave them open ended. So the idea is really anytime in the second half of the day. So like at starting from lunchtime all the way up until the close is when I'm
Mm-hmm.
looking at opening up these kinds of trades. And I call them a 1 inch punch position because they're really like out of Bruce Lee's arsenal, or really the entire martial arts arsenal. The 1 inch punch does the most with the least. And so if you think about applying a 1 inch punch on a pressure point on your opponent, like that's what these are. And so I had a trade today where for 70, I paid $74 a contract for GME, and right now, that it went up at one point 100 times. So
Nice.
yeah,
So
I think like 10,000% is what that was, and GME has faded back. So
are
what
you?
I did is I got into the. Let's just start with GME. Can we dig into that one?
Yeah, man. I am in the options chain for GME. I could switch over to the chart real quick. You just tell me what you want.
Okay, yeah, something's up on your Zoom window. There we go. Now it's cleared away. So what I got into Wednesday afternoon, I saw it start to break out. I almost texted you too, by the way, because it was such a crazy looking breakout or chart setup. I almost
Okay.
texted you. I wish that I did. So what I got into, Chris, was the 65 strike options for GameStop, and I got in at where it was 74 cents was the price on the contract.
I'm pulling it up. 65.
Yeah,
65
and
long.
and I had a bid on. I think it was I think I had a bid on a 60-70 bull call spread on GME, and it wasn't filling. I'm like, man, this thing is so strong. Like it's not filling, and so I looked at it. I looked at that chart pattern. It looked like a beautiful cup and handle on like a 30-minute chart, and
Right.
it was just like really accelerating. It wasn't falling into my bid. Like normally you could put bids on these things and walk away, and it'll fall into your bid because of the time decay.
Right.
But that wasn't happening. I'm like, this thing's so strong. I don't even want a bull call spread. I want an open-ended call
Right.
because I don't know how far it's going to run. So I got into the 65 call, and what I wish I did was sometimes I'll do what I call a rainbow combo, and I call it that because I'm buying at I pick a strike like the 65, and then
Uh-huh.
I'll buy at higher strikes too. So like 70 and 75. If you're gonna buy the like a really inexpensive call,
Uh-huh.
I mean you may as well buy some even cheaper ones higher than that in there at the same time. And I didn't
Cool.
do that this time, unfortunately, because that would have just been it would have been insane. My account would have doubled on this one trade if I had done that.
Nice.
Yeah, but I didn't.
That's all right.
I went in real small, and I spread these around. I put these kinds of trades on in a lot of different things sometimes, but there's really three things I'm looking for. So can you zoom in on the on GME? Let's zoom in and just look at the last 2 or 3 days, or maybe the last week of chart, and then yeah, can you scroll it so to where like get before it broke out? I want to show. I want to show. You see that strength right before that breakout?
Here.
Yeah, that's it. And so you could see that it just It's a cup and handle is what it made, and it looks
Down
so
here?
strong. It just started ramping right there. Yeah,
Made
that's
a cup and handle here?
well, yeah. If you look all the way back on the left side, you'll see that there's like a real clear resistance.
All
You
right,
see
hold
all
on a
those
second.
resistance levels? You can just draw a line. Yeah, there you
There
go.
we go.
Perfect. Yeah, that's what I was looking at, and I almost called you right there, Chris. I almost called you.
Okay, so here. Boom.
Well, all the way back, all the way to the left. Yeah, no. You didn't have to scroll. You didn't have to scroll. Put it back where it was.
All right, so what I'm saying is from here to
No,
here.
even further back. You're drawing an upward sloping line. I'm
Right.
looking at.
That's the cup and handle I see though. So
Well,
that's
I know, but what I'm telling you, see that. Um, Look at Monday. See on Monday
Monday.
that where it ran all the way up. Yeah,
Okay.
that's where my eye goes to at the top. And if you
Okay.
draw a line that slopes slightly downward and crosses the that other peak,
This way?
yeah, like that, and keep going all the way over, like that. Yep. And so as it's crossing that line with strength, and held
Oh,
above it.
okay.
So
Okay.
I wasn't in at that point. Or where I got in is where it starts right there, where it was at 50 or $52 right there when it starts
Right.
climbing
Uh-huh.
and it really started ramping because it was holding so strong above that support line.
Right.
And so it's crossing over all these moving averages. Or if you look at a moving average ribbon, you don't have to draw it on there, but people can visualize it. They start flipping. The moving averages start flipping so that they were below and now they're above.
Right.
And so a 1-inch punch performed correctly is it's not just a 1-inch punch, but you have to connect with your opponent and on a pressure point. Okay. And so, like, that's really the ideal way to do it. So, what I mean by that is you got to have a chart pattern lining up, and that's the pressure point, right? And the other thing is, there's three things. You need a chart pattern lining up on a short-term chart, and ideally on a long-term chart too.
Mm-hmm.
And you also need to have a drop in implied volatility.
Hey, I don't mean to interrupt.
Mm-hmm.
What?
Kind of wrap it up because we're going.
Huh?
We're gonna start. Are we gonna have dinner?
Yeah, a little later. Okay. I'm a little busy right now. You guys can start cooking if you want. So yeah, there's three things. One is the timing of it, right?
Right.
So you got to have like 2 days to go or 1 day to go till expiration. So like starting Wednesday, starting on Wednesday, that's really where you're in that zone. And a lot of times you have to use bull call spreads on Wednesday or bear put spreads. Hang on 1 second. The cat got in here.
No worries.
Why did you let her in here?
I didn't.
All right, so three things: the timing, the drop in implied volatility. You want really low implied volatility,
Right.
and then you have to pick like out of the money strikes and close till expiration. So that's how to line one of these up, and you can make thousands of % on these.
Yeah, I tried that with the SPY trade yesterday at the close. I went 4 contracts for what was it, 297, 397, I forget.
Yeah,
what it
probably
was.
397.
397, which was like 4 or 5 strikes out. And I
Mhm.
bought 5 contracts, and it was a Hail Mary, and it didn't work out. So because
Yeah,
it was so
and
far out,
interestingly, if you had done it as a straddle and you bought the put side as well,
yeah,
you probably would have hit a home run.
that was the first thing I thought of. And
Yeah.
I,
And so, like, sometimes I'll do a straddle, like other times I don't. So, Nvidia was reporting earnings on Wednesday, and after the close. So I didn't do anything on Nvidia Wednesday because the implied volatility is huge. So remember, I said like you need a drop in implied volatility. You need low implied volatility when you're going to do this. And so I didn't do anything with Nvidia on Wednesday night, but I did on Nvidia today. I got a straddle on Nvidia.
mm-hmm.
And I have legged into Tesla. I did a bull call spread on one side and a bear put spread on the other side, and I legged into them. So, like when Tesla is up, then I'm putting on the put side, and when Tesla's down, I'm putting on the call side.
Right.
And I had the call side on from Wednesday. And so what I ended up doing today is because Tesla was down so much, what I ended up doing was buying to close the short leg of the bull call spread. So what that does, it turns it into open ended because the short leg had already dropped a lot because the Tesla was down so much that bull call spread had lost a lot of money. But if Tesla shoots back up, I'll make a lot more if I just close out that worthless leg. It cost me almost nothing to close out the call that I was short
Right.
on the bull call spread. So that's another trick that you can do is leg out of these spreads when they fail, when they don't work. So remember, I have one on either side. So the one that failed, I legged out of the short side so that if it does come back, then I'll make way more.
Yeah, I was very, very bullish when I made that play into SPY. I didn't think that there was a chance in hell that it was going to pull back because
well,
it
you
had
and I have
broken.
talked about, it was probably going to rally into the end of the week. And I didn't think, so that was kind of my thesis too. We were seeing a lot of strength and energy and things like that looked like it was keeping the market up. However, like GameSpy or GameStop or whatever, yeah, GameSpy, that's an old program. GameStop, that's what changed it, right? Essentially, so you and I have talked about this quite a bit. Let's call it a thesis that I have a pretty good idea about who I think the players are behind what's going on in GameStop.
Oh yeah, yep.
And it's not the Wall Street bet people, okay? Like they're just in the right place at the right time, and they're maybe like a helpful thing for the people who are doing this.
Right.
But look, that guy Deep Fucking Value, he doubled down right after that hearing, okay, and it didn't do anything to the stock really.
Right.
So that's not what is moving GameStop. What's moving GameStop, according to my thesis, is it's an inner circle of people. Maybe their money is pooled, maybe not, but they certainly talk with each other, or they have similar money managers. And it's a circle of people around Patrick Byrne, the former CEO of Overstock.com.
Right.
They ran up. If you look, we don't. People can look this up on their own. We don't have to show the chart. You don't have to flip away. But if people look, they'll see that Overstock.com had a short squeeze, and it ran up 50 times from the March low into August of 2020. It had a 50-fold rise, and this really wasn't on anybody's radar. Nobody was really talking about it. But if 50 times rise from the low to the high in August. That's an insane short squeeze.
Wasn't he involved with that Russian chick from the whole MAGA thing?
I don't know a whole lot about that, but I'm not sure. But I think these are the folks who are they moved on to GameStop was their next target because it was the most shorted. It also had a naked short selling issue, and they identify it by failures to deliver. That's how they found it. Okay, and so the failures to deliver issue, like remember, Patrick Byrne and Overstock.com have been in a long legal battle, like a decade-long legal battle against naked short sellers. They know everything about it. And so they would have known how to pick out GameStop as their next target. And they ran so it was about 5-month period where they ran Overstock. And then it's been a 5-month campaign in GameStop, okay? And so, in that one, it's really kind of done. Like, this is if they're going to Volkswagen GameStop, like, this is it. It's starting now.
Right.
Okay? And so their next target, by the way, in my view, is silver. And I think they didn't quite get what they came for with GameStop. And so I think that's why it's squeezing one last time. But if you notice, at the very end of the previous squeeze on GameStop, where it went up to 450 or 500, where it had that run, it started spiking VIX, okay? And that's what's so important that we need to be talking about right now. So
which one I pulled up pause. Do you want me to pull up VIX?
Yeah, pull up VXX and let's just take a look at this. you'll see that in the very end of January, just as GameStop was having its blow off top at 450, that's when VIX had a run in the end of January. You'll see there was a VIX spike in the end of January.
Yes.
Yeah, so it's right there. It's kind of small on this chart, but if you zoom in a little more, so you see you're showing the March spike, but you could zoom in way more.
Yeah. You're talking about January 2021, right?
Yeah.
Yeah, right here.
Right. That spike that started kicking in just as GameStop was overheating, and so the plumbing, the Wall Street plumbing started to break. And that's why VIX started rising right there. And then when GameStop let the pressure off, it started fading back. And now GameStop is leading. It's the trigger. It's the pedal to the metal. The button these guys are pushing that's causing VIX to spike. And so there's actually a few different drivers here. Another is the bond bubble. And so that's why when they come for silver next, we already see the effects of them starting to come for silver now. They've already cleaned off all the physical, and then they're cornering the backlogs too. They have a big enough war chest to do this if that's their intention. And I don't think that there's any way to. When we remember the Federal Reserve had they had an outage in their monetary routing yesterday, right as that GameStop thing was going on. That was in response to there's a whole silver saga going on right now where there's futures deliveries. I think we had talked about this last time to watch out for the futures delivery notices. And I think the Federal Reserve they've got them caught. So. They're playing games to try to minimize the amount of silver deliveries, okay? And so the dollar and bond government bond strength is all wrapped up in keeping the precious metals down. That's key to their narrative. They've been doing it for years. Like this game can continue, the musical chairs can continue as long as people aren't panicking into precious metals. And it looked like people were panicking into Bitcoin. But Bitcoin is a risk asset. So
Bitcoin is just a code on a computer.
Yeah, but if people are using it to move, they're if you thought that the financial system was going to collapse, you can move assets into Bitcoin, sidestep the collapse, and then when a new monetary system is created, you can then switch from the Bitcoin back and buy into the new monetary system.
If I felt that the system was going to collapse, I got to tell you, my first thought is not Bitcoin. My first thought is either the yen, the yuan, or gold or silver. Those are my three things that I would get into. And I've already got silver, so that aspect is covered. I didn't feel good about gold this past decade, and I guess my hunch was right because silver is outperforming gold a lot.
So going back to GameStop, starting what was it, 2 days ago?
Mm-hmm.
What I did, and I wanted to do a show on this last night, but it just never came together. Is hey, for those of us who are in GameStop calls that are expiring on Friday, what's the move? And so I want to talk about what I ended up doing. So can you bring up the 65 call for GameStop?
Yeah, I just had that pulled up. What'd I do with it? Oh, I changed it over to the VXS. VXX. All right, hold on a second here. GME.
All right.
And hold on, give me a second. I got to change it over to that screen. And 65.
Yeah, the 65 call, and then you could zoom in and just look at the last week or so on the chart.
All right, so we're going to do that, delete that.
So GameStop isn't going to move all that much during market hours. It's mostly going to move during, when the market's not open. And so, the timing of that breakout was really interesting because they essentially had it halted into the close. And so the first time it halted, gave enough time for everyone to essentially like run to their computers and click the buy button as soon as it got unhalted. So they timed the breakout on Thursday so that it essentially was halted and then unhalted and then halted and then the market closes. So
Are you
it's
talking
halted
about
all the way
yesterday?
into the close. So I mean that timing was like machine precision or military.
You're talking about
precision.
yesterday, right?
I mean it was just so good, the timing of that breakout.
You're talking about yesterday, right?
Yeah, those volatility halts. I mean they
Yep.
pushed it to exactly the right levels in exactly the right times. And then once the market's closed, there's no limits anymore and they can move it wherever. So I mean they acted with maximum impact.
Mm-hmm.
I mean it was just breathtaking to behold. And so let's look at this. So this is the GameStop shares. Can you look at the 65 call?
Yeah, I got it right here.
Okay, cool.
Oh, am I not showing that?
No, it's showing GME right now. I think.
Yeah.
Is it the?
That should be the right here. This should be it.
Okay.
Are you looking at the chart or are you looking at?
Yeah, I see the GameStop shares chart where you drew the red line.
I don't know why that's not pulling up.
Okay, well that's all right.
There we go. I got it.
You got it? Okay.
Yeah, I forgot to press share. Duh. Now you should be able to see the GME highlighted 65 call strike.
Okay, I'm seeing options chain. I'm not seeing the chart though.
Oh, you want the chart?
Yeah.
So sorry.
That's all right.
I will have that for you momentarily, sir.
Cool.
And now we're going to where the hell
So,
did that go?
You know, my idea here is I want to carry this overnight. I want to carry, that 1-inch punch trade. I want to carry it overnight, and I want to carry it overnight the second night. So, what to do on Thursday in order to best handle the trade? So, here's what I did.
This is GME.
Yeah, that's good. So I bought this thing as it's breaking out, essentially for almost nothing.
Right. So you're down. Wait, you're at 65. Where was it at when you bought it?
I got it when it was 74 cents.
74 cents.
Yeah.
So you got it.
Yeah, I got it right there, just as it started to move.
Right here.
Yep.
Nice. Very cool.
And so
you got it down here. Whoops.
Yeah, and so here's what you could do. Like the next day, you can like sell off some of your position if you want to, but that's not what I did. Instead, what I did, Chris, is what I ended up doing was rolling up in strikes. And what that does is you're essentially taking a bunch of money off the table, but still leaving some room on the trade to run. So if it breaks out again, so say it gaps up 100% tomorrow, which it could,
right.
Okay? If it does, I'll make, not only will I have taken money off the table, but I'll make even more than I would have if I had just kept the 65 strike. So I rolled up to the 150 strike. And what that ended up doing was taking 2/3 of the money off the table and booking it as a profit.
Okay. I feel you.
Yeah, and so like even though GameStop went down, now it's like, well, I'm only going to lose 1/3 of my profits if it keeps going all the way back down.
Right.
Like say it craters tomorrow, it goes all the way back down below where it even broke out from. If it does that, well, then I only lost 1/3 of my profits. But if it rips higher, I'll make even more than I would have if I had left on the original position.
Right. Okay.
Yeah, so that, just file that away as like, these are pretty advanced tactics, I think, that I'm talking about here. Like knowing when to roll up and knowing when to, how to leg in and how to leg out of things.
No, I feel you. I got you. I understand what you're saying. Right now, I'm trying to pull.
So we covered a lot of what I wanted to cover so far. What we didn't talk about yet was bonds, and we didn't talk about energy. And probably I should mention how Bitcoin is tied up in all this. So Tesla. Let's talk about Tesla for just a minute.
Hold on. Okay.
All right. So, have you been trading Tesla this week, Chris?
I do not trade Tesla anymore.
Okay. So this thing is rolling over, and I've been talking about how the puts were cheap on Tesla. They were really
Hmm.
cheap proxy for shorting the market,
Right.
and so I've got some actually quite a bunch of puts, a bunch of different put positions in Tesla right now.
Okay.
But
Cool.
the reason that I kind of wish I had a chart like a diagram to show this. But the market is so sewn together now. All of these momentum trades, and
Hmm.
so it comes back to a few key innovations. It comes back to blockchain technology. It comes back to battery technology, and that's what's tying. Those two innovations are what's tying together the ARK Innovation Fund, Tesla stock, the pot stocks, and solar stocks, and also the electric vehicle companies. And these are all the things that have been running wild this year. So the pot stocks, because I think that they've got more freedom to put their cash into Bitcoin. And so I think, I don't know this for a fact, but I'm speculating that, they're taking their cash and going into cryptocurrencies with it. Okay, so that ties in with the blockchain technology. Uh,
What is BTC doing? Let me pull that up real quick.
Well, I only know of that Grayscale Bitcoin Trust. I
I
don't
got
know
it.
of what the ticker you could find in here is other than GBTC,
No,
because
I
there's
got
not
it.
options for it anyway. So all these things are interlinked. It's one big trade now. They're so sewn together. I heard that Kathy Wood was selling off Apple shares and Amazon shares in order to double down on Tesla, in order to keep adding to Tesla as it's dropping. Why?
Right.
Because Tesla's dropping faster. So her thinking is probably, or her traders, whoever are doing this,
Yeah.
that when Tesla recovers, because it always has, right? When it
Right.
recovers, it's going to spring back faster than these other things that are lower beta.
Okay.
So she's selling off lower beta things and moving into higher beta things and concentrating also. So that ARC fund, it was down like I think 6% today,
I
and
was
down
looking at
even
that. It
another
looked like hell.
2% in after hours.
Yeah,
So
it
I mean,
looked
this
like
is a
hell.
train that's coming off the tracks. And when she said there will be fear, she wasn't kidding.
Well, I said that not to say, I said, she said, whatever, but during our pet let me rephrase that. During one of our podcasts, I had mentioned that the queues looked unusually weak here.
Yeah, and there's
And
huge volume coming into them as they're selling off now, Chris. So I mean,
yeah,
I do remember you mentioning that, and you're right.
the NASDAQ 100 just looks like dog shit wrapped in cat shit. It's
Yeah,
really
well,
bad.
guess what? They own a lot of the same shares or a lot of the same companies that Kathy Wood's ARK Innovation Fund is in. There's a big
Right.
overlap there. So the Nasdaq, it's all wrapped up in this too. And guess what? Guess how they overlap? The
Mm.
semiconductor space
Hmm.
overlaps with a lot of Kathy Wood stuff and the Nasdaq. Like it's all
Right.
tied together. It's all one big trade. And so
Hmm.
as you see Bitcoin come down, as you see the pot stocks come down, as you see TLT coming down. So we talked about the TLT and LQD and HYG dominoes. We talked about how these are dominoes, and TLT fell first,
Right.
and then it spilled into the LQD, which is the investment grade corporate bonds, and now as TLT is actually slowing its fall,
Hmm.
it actually reversed and closed off the lows. Well, LQD and HYG did not. It's now spilled over into high yield corporate bonds, which is what I have been predicting for like 2 weeks now. And
Hmm.
so the put position that I have on in HYG is I have for the March expiration, I have a rainbow combo. I've got the 87 put, the 85 put, the 83 put, and the 81 put as a combo. And what that
Right.
does is it accelerates as those shares drop, it keeps on accelerating higher that combo.
Hmm.
And so like those ones that are further out get cheaper and cheaper, but I don't like just buying the further out ones because the break even's so bad on them.
Right.
So when you buy it as like a rainbow like that, a rainbow combo,
Uh-huh.
then what that does is it keeps your break even. It takes on the qualities of buying at the money puts, but also deep out of the money stuff. So it's a really neat tactic to do it like that.
Mm-hmm. Cool.
Yeah, so that position, by the way, that I've been talking about, since I've been talking about in this show, it has more than doubled.
Are you talking about your HYG?
Yeah, it's already more than doubled, and I went in pretty big on this one. And so, like, if it really falls apart, I mean that will resemble the a similar kind of return like what Bill Ackman had on his on whatever it was that crash insurance protection that he bought for the lockdown crash in March 2020. If you remember, he had a 100x return on crash insurance bet, which he put 1% of his fund into.
Right.
Well, I put more than 1% in on this HYG thing, and it can have a similar payoff.
Nice. That would be great.
Yeah, I think I went in with about 3%.
I am doing the opposite of you. Instead of shorting HYG, I just started today to scale into TLT longs.
Oh, yeah, and you know what? I think your timing is actually great because we're seeing TLT. It had that hammer, a nice little wick on the bottom of it today.
Yeah, I'm staring. Actually,
as the market starts to crash, that's what stops the bond crash. So anytime the Fed wants to stop the bond market from crashing, they just tip the stock market over.
Right.
They do. And this was predictable. And when the stock market tips over, guess what happens to HYG, the high yield bond funds? They get obliterated. But you're going to get some really nice upside on TLT probably. The one factor going against you on that is, well, there's actually two factors going against you on that, is the silver squeeze is one. And if that factor overpowers the stock market drop, on TLT. The other is stimulus, right? The stimulus checks.
Right. The stimulus
I don't know how imminent those are.
The stimulus is the only thing I'm worried about. But with the way the government has been dragging ass, I got to tell you, I'm not sweating over here.
Yeah, you're right.
The other thing I've noticed is that silver is crashing with the market. Well, it's not crashing, but it is going down with the market.
It's now getting hit. Yeah, just as HYG is starting to get hit, silver is getting hit too. So, by the way, like this is why I talk about not chasing. Remember I talk about buying, when I'm trying to accumulate a position in a long-term position in silver minor out of the money options, I'm doing that where I'm buying in two kinds of situations. I'm buying breakouts from pivot points, and I'm buying down days. Right. So I'm not chasing. And so for the last couple of days, I wasn't buying. And then today I went in and I got some Wheaton calls that were deep out of the money in January 2022.
Right.
Expiration. So they've got 10 months or whatever on them.
Right.
And so, by the way, I talked about a 5-month time frame for the Overstock short squeeze. Another 5-month time frame for the GameStop short squeeze.
Right.
I think with silver, probably we're looking at a similar time frame of 5 months starting from about now. And so, having a year of duration, though, is fine. Like, it's okay because I can always roll in.
Yeah.
In fact, it's my plan to roll in. So, because what I want to do is, those out of the money options, I eventually want to exercise them. So my hope is that, those mining shares will be marginable. And so once they're marginable, and if those options become deep enough in the money where the delta is real close to 1, then it actually is cheaper for you to carry it if you exercise the option and carry it as shares, if they're marginable. If they're not marginable, like Riot and GameStop, then it's cheaper to carry the options.
Right. I hear you.
And
I have a question for
ideally,
you.
I would move those miners into a cash account.
Oh, okay.
Yeah,
Sweet.
there's a reason for that. It's because if you really need your silver, if you need it, it's because there are some serious problems with the plumbing of the financial system. And
Oh, yeah,
so
yeah.
cash account is the safest place for paper. Like your
Right.
mining shares in the cash account will probably make it through even brokerages going under.
Right.
Whereas, your money can be held up for a long time if it's in a margin account and your broker goes under. We've seen this with Refco. So I've talked about this on the show before. I don't know if you were on that one or not, but we talked
Uh,
about, or on
no,
the
I
show I
was not.
covered the Refco. Uh,
Nah.
uh, they were a commodities broker that went under. And so what
Nah.
happened with people's accounts at Refco?
That
So
sucks.
yeah, hey, I probably need to, because of the timing when we started this. I gotta I can't do a super long one tonight. I gotta go. I gotta head out for dinner soon. So one thing I talk about because it's happy hour. I gotta talk about. I did buy some NA beers to try, but that's not what this one is tonight.
Okay.
Tonight I've got a Incarnation IPA.
Okay.
It's real good. So that's what I've been enjoying. But I got some NA beers too. So I know that not everyone is a drinker who might be watching this. So for you, I want to show some NA beers and give my thoughts about those too.
I'm
So,
sorry, my son was talking in my ear. What's up?
oh no, I just I want to enjoy some NA beers on the show too, because not everyone is an alcohol drinker who might be
Oh,
watching.
yeah.
So.
Oh, so let me ask you a question. I know I'm noticing that my charts are pulling up a lot more responsively. Have you been noticing that?
Where they're coming up.
That my charts are
Yeah.
pulling up. They're not getting stuck like
Oh
yesterday
yeah,
or
on
the
the
day
stream.
before yesterday.
Yeah, I'm not sure
Okay.
why, other than I tweaked a few video settings, so that could be.
I'm at my trading station. This thing is like it's a sick computer. It really is. It's way overpowered. And I just overclocked it about a week ago, so I think that might be it. I'm not sure, so I won't do any more laptop Zoom
Well,
calls.
what I'm seeing though, I'm seeing when I look over there.
You should see HYG, TLT, the VIX, and the DXY
Yeah, but
on
that's
your
not what
screen.
I'm showing that OBS has. So I mean, maybe I should have been watching better. There's still some
OBS.
lag issue here.
So you're not showing the HYG, the DXY right now?
No, it doesn't look like that's what's streaming out. Here, let me reset this for every. Oh, you know what? It just caught up.
Okay.
So yeah, I'll play with things on my end too, but we may have to use something else other than Zoom because of this lag. I don't know why it's lagging like that, but
Yeah, it's weird.
yeah.
All right. So anyway, while you were talking about HYG, um, I am looking at, and I wanted to pop in to talk about this base that excuse me, that we're seeing in the dollar.
Okay.
I don't know if you see it, but this is the reason, or one of the reasons, why I went long uh TLT. Can you see this?
Yeah, yeah. So it's looked like it's the range is getting tighter. It's still in a dropping channel, a channel that goes down.
Yeah, but that's that is the overall uh trend. But Tesla made this similar pattern at 250 when I said told myself I was going to buy it and I didn't. I'm going to beat myself up over that for decades to come. So,
Yeah. Well, I mean, it went up huge from there,
yeah,
and
yeah, and
and
it's
pretty
split
steady.
too. So if you look here, it kind of similar to this, and
Oh
it's
yeah,
kind of
yeah.
at the
Good
same
call.
spot.
And let's see here.
So
When was that? What year was that? 20,
it was
2017, 2018?
2017 ish. So we're right there. So I am
Yeah.
actually getting bullish the dollar.
Yeah,
I
and so the big driver for that is probably going to be money coming out of alternative bond funds. So there's a whole spectrum here. Like people who are in people who are long equities. They might say, "Oh, well, I'm gonna downshift my risk and I'm gonna go into corporate bonds." People who
right,
are already in corporate bonds are like, "I'm gonna shift my risk and move from high yield corporate bonds to investment grade corporate bonds." And people who
right,
are in investment grade corporate bonds are gonna, they say things like, "Well, I'm gonna move into mortgages and muni bonds." And people who are in mortgages and muni bonds say, "I'm gonna downshift my risk. I'm gonna move into long term treasuries." And people who are in long term treasuries say, I'm going to downshift my risk and I'm going to move to T bills with 3 month duration. And people who are
hmm
in T bills, they're going to say, I'm going to downshift my risk and I'm going to move into overnight or cash. You
right.
see? And that is what is going on right now. So as you see risk assets falling, it pushes money down the spectrum and into, it gives that dollar strength you're talking about.
So because of that chart symmetry that I saw, um, and I learned about symmetry through watching the Fibonacci Queen, Carolyn Baroden. She's at Fibonacci Queen on Twitter. Um,
Yeah, I'll have to check that out.
because of
I'm gonna
her
add
and
that.
her symmetry analysis, I have learned that looking left on a chart provides a shit ton of value when you are using Fibonacci levels, like extensions and retracements. So that's something to be aware of. That was it.
Yeah, well, really great observation there, and I think your timing it's lining up with some of the macro factors that we've been talking about. With the shift in risk assets.
Right. Long dollar is going to affect the market. I would have expected it to affect crude more. I did make a 130% return on investment from yesterday into this morning. I think it was.
Yeah, well, you've been talking about that this week. Last time we spoke
No,
about,
no, no. I'm sorry. That was a day
eventually
trade.
it's going to come into uh, it's going to come in and hit energy. It's going to hit crude. Like it had gotten ahead of itself.
Yep. It's been ahead of itself. It should have never got to 63.
Yeah, and if you trade
Um,
too big, you blow out. But if you're not trading too big, then you can wait it out.
right. I bounce in and out of oil because on a shorter time frame I know what to look for. So I made 130%. It wasn't yet last night. I got in when I shut down my SPY because I saw the market going south today. I decided to short oil and make myself feel better. So that's
All
what I
right.
did. Oh, I go rounds with myself over this whole crude trade. It really it aggravates the hell out of me. But anyway, so I did get into TLT, and we do have what seems to be, if nothing but a pullback that could turn into
Yeah, it looks like it's
longer
trying to
term.
bottom here,
Yeah,
and that's what I was saying. Like, with that wick on the bottom of the daily chart, and like, looking at that 1 hour, like, it looks like it's trying to bottom.
yeah. I also did a time structure on it, and it looks ready. It
So
really does.
one other thing that I got to touch on this topic is the VXX. I mean, it was up pretty big today, but this is nowhere near some of the like the normal kind of spike that it does when the market really tanks. And so there's a few reasons for that. Like the areas that are selling off hard are pretty concentrated around the things that have been outperforming for since the March 2020 bottom, like the Arc Innovation Fund, all those holdings,
Right.
the battery technology, the Bitcoin, the pot stocks. These are the things that are selling off hard. Oh, and dude, I did follow you on the your box store idea. You tweeted this out. I think it was yesterday. about box stores getting hit. And so I went in and I did some 1-inch punch trades on.
Oh, big box. Yeah, yeah, yeah,
Yeah,
yeah.
I did 1-inch punch trades on Costco and Lowe's. So thank you for
Okay.
those tweets. They made me some money. Not a lot yet. I think these positions are they are profitable so far. But
After we,
they're not like, because they're small trades to begin with. If we
well,
have a big down day tomorrow, then I could expect to have some like real meaningful profits from them. But as it stands, it's like they're doing better than expected when you expect that like most of these trades are going to flame out or become worthless.
I put those tweets out 2 days ago after we did our
Yeah, it was
uh
right after that, and I acted on it too. So thank you, for putting that on my radar, and that was making me some money.
the following day. Home Depot dropped $12 and Lowe's dropped $8
Yeah, and I
on a
think it
Gap and
was
Go. They were
yeah,
both Gap
and
and Goes.
so you were very timely with that call. I
Thanks.
wish we got to do a show last night because that was something I wanted to talk about.
I had to catch up with Liam. I had to get some time in with him.
Yeah, no, I understand. In fact, I gotta jump out of here soon because I know that they're already getting started on dinner, and normally it's like something I'm participating in, but
All right.
I wanted to. It was super important for me to make the show happen tonight because we didn't get to yesterday, and so
Right.
and we're coming up on an hour. We're almost at an hour, so I mean that's pretty good. One thing I messed up again, like I'm still kind of new at this streaming thing, is I didn't name the broadcast right, so I'll rename it for the replay.
Okay, I hear
I'm
that.
coming.
I
Yeah, I'm
hear that.
getting summoned for dinner, so
Yeah, man.
yeah, I'm gonna tweet out the replay for everyone, and we'll try and drum up some interest in the replay. And for anyone watching this, if you like the content, please share it. Help us get the word out. This is a brand new show, Trading Homework, and follow us on Twitter, and hit the like on the YouTube. It helps us. So.
Yeah.
And thanks, Chris, for joining. It's been a regular thing, and I've gotten so much out of it. So, and
Yeah,
thanks for sharing these charts. And
I'm having a good time.
yeah, it's been awesome.
All
All
right,
right,
John.
well, I gotta go, but yeah, I'll be watching you on Twitter, man. Keep those
Uh,
ideas coming.
all right, no worries.
All right, adios.
Be good. Bye, y'all.